I have to start with the massive increase in taxable supply that we have seen this year. Does all of that new supply make you a buyer of taxable munis over tax-exempt munis?
Good morning. I wouldn't say it makes us a buyer of taxables over tax exempts, but it makes us a buyer of the market, including taxable munis. In the month of November, we saw 25% of issuance come in the form of taxable munis. This has drawn in some overseas demand, as well as some good, healthy crossover demand into the market that we haven't seen much of since tax reform was done and signed into law in late 2017.
You know, Sean, we usually see some lighter supplies we head into the end of the year, which typically lends December to having a good month. Are you holding on to munis as you head into the final month of the year to capture some of that performance? Or are you taking some of your gains and getting out?
We are going into the year rather constructive and a little bit longer duration. Typically, December and January, better known as the January effect in the market, accounts for about 40% of your annual return. So going into December, it's not really a time you want to be holding a lot of cash or even be caught short duration, especially when U.S. Treasuries are trading in such a tight band as they are, going back and forth on optimism around a potential trade deal. So we find ourselves constructive, and albeit the calendar may be a little larger than it has been in prior years, we do know that about a quarter of that is attracting a different audience. The tax-exempt portion has been rather well spoken for. We've seen subscription rates actually tick up into this increased supply as opposed to backtrack.
Sean, how do you take that view and push it forward to January? Usually you get some selling pressure in January. Do you expect that as well as you look to 2020? Or are you looking at it to revert back to some of the historical norms that we've seen?
That's a good question, Taylor. That's what we're spending time on now. I mean, does the year roll over? Do we turn the calendar and we come into a January where issuance is down a bit? There's more activity in the secondary market to begin the year? Or do we turn the calendar and we see similar issuance patterns, an elevated January and potentially even an elevated February when typically you'd have muted supply? I think that all signs right now are pointing towards we will see some elevated supply continue into the new year. Perhaps not to the figures that we've seen recently. We saw, about $100 billion price in October, November, probably another $40 billion on tap for December. So potentially we don't get those types of numbers as we come back from the holiday, but we are anticipating the supply is going to remain healthy, but we look for demand as well. We just received our 47th consecutive week of inflows. 84 billion year to date. That's very rarefied air. As long as demand continues, the supply will be well digested.